Is it too late to invest in gold stocks? Many believe July 2020 was one for the gold history books, but it wasn't even a top 10 move in gains for gold historically. In fact, last month's big move in gold to all-time US dollar highs was the 23rd best spot monthly return. Let that sink in. A new all-time high was hit, and yet the big monthly move that's drawn a generation of new investors and captured the imagination of a whole new set of investors isn't even a top 20 monthly gain percentage-wise for gold historically. We are far from a top in gold. The chart you're looking at right now is the top 10 gold spot monthly percentage-wise returns. July 2020, again, was the 23rd largest return at 11%. Gold and silver stocks have responded, catching a tailwind not seen in a decade. As I showed in my premium newsletter to subscribers this week, institutional money hasn't even entered the sector yet in a big way. We published a very detailed analysis of the flow of funds from institutions, and we shared our unique conclusions based on proprietary data. In the 12 years since the global financial crisis, the US Fed, European Central Bank, the Bank of England, and the Bank of Japan have invented new ways of printing money and keeping the financial markets afloat. What you're looking at right now is a chart showing how much the total assets, think of it as balance sheets of the central banks, have ballooned during the crisis. It's incredible. The expansionary monetary policy is beneficial to gold. Now, there are two primary schools of thought on this. The first is this is inflationary. The second is deflationary. Regardless of which scenario you believe in or plays out, gold will benefit because that is its primary draw as an investment, a hedge against fluctuations in the real value of money. A pandemic and a lockdown produce record flows into safe haven investments like AAA rated government bonds, believe it or not, often right now with negative real and nominal yields, large tech stocks with solid balance sheets, think paying for financial safety in the FANG stocks, currencies like the US dollar and the Japanese yen, and of course, gold and silver. So now gold goes mainstream. The once pet rock and barbarous relic is now on the lips of every talking head. Flip on the financial news nowadays, and every trader and portfolio manager seems to be extolling the virtues of gold and silver. Now, you'll hear guys like Jim Cramer talk about gold miners like Barrick, Newmont, and Agnico Eagle are some of the better buys right now. Looking at the year-to-date returns, it's hard to argue that gold and silver aren't the clear winners in this bull market rally. The chart you're looking at right now, the GDX and the GDXJ, are at the far left because they're at 52 and 49% returns year to date. That's outperformed the FANG stocks and all of the other indexes. Now, economists like Nouriel Roubini and Mohamed El-Arian are talking about gold and the benefits of safe haven metal in these uncertain times. It's going mainstream. Even Goldman Sachs is changing their tune. They once mocked gold as an investment that's nearly always beaten by the market. They've since joined the chorus of major financial institutions like Bank of America and Citigroup, ringing the alarm on currency debasement. Things have changed so much over the last decade, and we are just starting to see the impacts of MMT, modern monetary theory, on the price of gold. So a question many people ask is there enough gold to meet demand? This year, as many as 119 producing gold mines in 18 different countries have either been offline at some point or operating at a reduced capacity due to COVID-19. Estimates vary as to how much of 2020 global gold production was lost as a result of the pandemic. The last COVID-19 impact report published by the S&P Global Intelligence estimated about 10% decline in their forecasted gold output for 2020. That's roughly 11 million ounces. The 10% estimate was also affirmed by the World Gold Council despite sourcing their data elsewhere. So let's go with the 10% figure, as I have respect for both outfits who have come to the same conclusion using different data sets. Previously, 2020 gold mining output was projected to increase by 3.7% year over year, meaning 2020 there'd be 3.7% more production than in 2019. Instead, it's fallen by at least 6.7%, barring any unforeseen shutdowns later in the year. The most important statistic from the data was an estimated $2.5 billion in revenue from forecasted gold production was lost. For lost silver production, the amount was about $502 million of lost production thus far. Gold investor beware. Gold projects that weren't economic at $1,750 per ounce suddenly look like no-brainer investments. Land packages that were once barren moose pasture are now labeled as greenfield mining projects. For new investors and speculators in the gold space, don't forget buyer beware. Not all gold projects are equal. There's always been three types of management teams in the precious metal sector: the innovators, the imitators, and of course the hot dog vendors. It's just the latter two, the imitators and hot dog vendors, aren't around during a bear market, but pop up during a bull market like a plague. Make sure you know which management team you are backing. Everything starts with great people. Flavor of the day companies will chase any bull market. In the late 1990s, there were thousands of dot-com companies. In 2007, there were literally over 500 uranium companies listed on the stock exchange, where there were only 15 5 years earlier. In 2017, we saw the cryptocurrency market exploded with over 850 coins and new celebrity initial coin offerings announced daily. There will be an explosion of new precious metal companies and financings looking for your money. Or worse, to leave you with holding nothing better than an old hot dog. Is it too late to invest in gold stocks? As gold pushes higher, the economics of many projects will change. And there are many factors to consider when reevaluating a company. All-in mining costs, exploration costs, administrative costs, royalties, taxes, currencies, and much more. Do you know which companies in your portfolio operate in safe jurisdictions and away from nationalization and confiscation risks? You should. Is your valuation properly discounted for these potential cost inflations and government risks? Just as much as you fawn over a climbing gold price, don't think that foreign governments aren't doing the same. They have services and stimulus to pay for those votes and to keeping the masses happy. We are in the era of woke and where feelings matter more than reality and logic. You don't have to spend over $500,000 a year on data feeds and analysts to figure out which gold companies to invest in. Consider becoming a subscriber to Katusa's resource opportunities and let us do the hard work for you. So, how is Katusa research done? Not only have we beaten every index and sector in the stock markets, our portfolio consisted of liquid, meaning not micro caps that trade on appointment, that were considerably lower risks than the indexes that had risky companies in them that we all beat. Now, the chart you're looking at right now is the year-to-date returns comparison. Here's my gold portfolio on the far left. We're touching almost 90% year-to-date returns. The FANG stocks were a little over 50. The GDX, the VanEck Senior, the GDXJ, that's the junior, Gold Bullion, and NASDAQ. We've beat it all. Now, many will promote their large gains that trade by appointment. That is nothing more than speculations that are not liquid. Be wary of what you are buying and specifically your allocation to different companies. You do not need to increase your risk exposure to increase your returns. My portfolio has proven that. You can follow along to see exactly what I'm doing with my own portfolio and the just released details on my next major gold investment. It's a brand new company with major upside. Even better, it'll open to all investors, not just the rich ones. This is going to be a very fun ride. Stay healthy.